found the land that you want to start running your farm from, you found a space that you want to build your processing plant, or you just bought your lorry that you want to start venturing into logistics for different farmers, or you want to venture into agro commodities trade, whichever one you want to do, it's very important for you to understand return on investment. And if you stick with me to the end of this video, I'll be sharing with you what is ROI, that's return on investment, and why it's very, very important for your agribusiness. I'll also talk to you about how to calculate ROI for any business venture that you are venturing into. And I'll also talk about common mistakes that farmers make when measuring profitability. What is ROI? ROI stands for return on investment. Return on investment. That means you invested something and then the return that you get, because the purpose of a business is to make profit. If you have a business and you're not making profit, then maybe you have a charity organization or a non-profit organization, as the name implies. But if you have a business, your main goal is to make profit for yourself. That means that's the incentive for you to continue in that business. Like for example, we see farmers dumping rice and maize cultivation because they don't have any profit from that business, so to say. So there should be a return on investment, which is very important for you to calculate. I want to talk about somebody called Shola. Shola has a pepper farm, and then he spent some money. Let's say he spent like 200,000 naira in terms of the planting, the cultivation, those things like that. And then when he sold it for about 300. When he sold the pepper, he found out that he made a revenue of 300,000 naira. Now, on normal looking at this thing, you may think that he made a profit of 100,000 naira. But is that really his profit? Is that really, if we say we're going to calculate his return on investment, we're going to say how much did he invest? He invested 200,000 naira, and then how much is his profit from this business? But this doesn't tell us the whole story of Shola, because there's so many things that are hidden in this 200,000 naira and in this 300,000 naira that we are not aware of. For example, there may be hidden costs in getting this 300,000, or there may be hidden costs in terms of logistics, which he then puts in terms of moving the goods, or maybe things that he spent his own money out of this 200,000, or things like hidden costs that he didn't know about. Maybe he's feeding on the way, or feeding of driver and things like that maybe he didn't put into consideration. Maybe those things outside the farm. And the other thing we didn't put into consideration is where did he get this money from? Is it loan, or is it a loan? Is it borrowed money, or is it investment, his own personal investment, and things like that? So if we're calculating return on investment, there are so many things that we need to know. But generally, on this 200,000 naira, we can say we have 100,000 naira divided by 200,000 naira times 100. That's the formula for return on investment. Return on investment. We're going to, from the second half now, we're going to talk about. I'm going to show you how to calculate return on investment for some agro commodities and some different crops that we farm frequently. So you see that the formula for return on investment, ROI, is equals to the profit, net profit divided by the total investment times 100%. So you can see from here we can cancel out. Then we're going to have his total return on investment is 50%. That's what he got after selling this. That's on paper, he got 50%. Now, it's very important for you to understand the financial statement. In the financial statement, we have our sales. We have, after our sales, we have our cost of goods sold. After that, we have our gross profits, right? You can also get your gross margin from there. Then from here, we start having our operating expenses. We start having like general and sales or administrative costs. We start having different things like marketing costs and all those things like that. Then after our operating expenses, we now have what we call the operating profit, right? From this operating profits, the business is a registered company or registered business. You now have things like taxes and then depreciation and then things that you pay to the other investors, or your interest that you pay on debt. Then finally, after your interest on debt and then taxes, you now have what we call the net profit. Now, this net profit that we utilize to calculate the return on investment. So if after seeing that Shola made 100,000, maybe that 100,000 was maybe his gross profit. Was it his gross profit? Was it his net profit? Right? Was it his net profit, or was it his operating profit. Maybe he put up 100,000 naira, but out of that 100,000 naira, he took a loan where he's paying 50,000 naira every month. So that 50,000 naira is going to go into after our operating profit. We still have 50,000 naira to remove from there in terms of interest paid before we have another 50,000 naira here, the net profit. So you need to understand financial statement. Very, very important. We have financial statement, we have the income statement, and we have the balance sheet. So all these things tell us the story about the particular business that you're doing. You're going to make sure you subscribe to this channel, because in this channel I'm going to talk about everything agriculture. You can see from here, net profit is 50,000 naira. So if his net profit is 50,000 naira, so we calculate is 50,000 naira over our total investment. Let's say our total investment was 200,000 naira. So you can see that the return on investment is going to reduce, right? So we're having something else. We're not having 5 over 2, that's 25% is what we're having left, right? So that's the return on investment. That's because we now change the word from operating profit to net profit. It's very, very important for you to understand ROI, because if you don't understand return on investment or ROI in your agribusiness, there's tendency for what we call business blindness. You think you're making profits. It's happened to me lots of times. You think you're making profits, but you're not making profits. I don't know how much is it giving you. Let's say you made a profit of 100 naira. You invested 500 naira, you made a profit of 100 naira. But the stress it took you. Let's say this one is like or let's say this is like 20% profit. This ROI is 20% return on investment. But your whole efforts, the stress it took you, and then everything that you spent in terms of the cost and everything, is it really worth this 20%? That's the question you're asking yourself. What is the return on investment that you're going to make? And especially in percentages, it has to be in percentages. So you want to aim for a percentage of like 20% upward. You don't want to have a percentage of 0.2%. Like too many big tech airline companies and things like that, having 0.2% as profit. That's not really good. After removing all your cost and then everything, that's not really good. You're having 0.2, you're having 5% profit. It's not really sharp. You want to aim for 20% upward to understand all these things. You are going to understand how much was your revenue, how much your revenue coming, what is the cost of the goods that was sold, that's all the things you took to manufacture that goods. Then you have your other operating costs and things like that. Then you have your net profit, which you finally get. Then you divide it like total investment that it took for you, not just the cost of that goods, total investment, right? So after that, you can now calculate your return on investment and know whether it's really worth it or it isn't worth it. So you're talking about ROI, you're talking about ROI. I'm going to show you the return on investment for two products. I'm going to show you for agro commodities trading, which you are going to use palm oil as an example, as a case study. Then I'm going to show you about a crop, maybe cassava, so that you understand ROI that we're talking about. So let's look at palm oil trading business. We're going to make some assumptions here. You can see buying and selling of processed palm oil. And this case study, you're buying them in 25 liters keg. Go to 25 liters keg, that's where most people buy their palm oil to store. You buy palm oil, you store it at a period after a period of time, then you sell it when the price is high. You buy low and then you sell high. That is your main goal in palm oil trading. Some people store it in drums. Storing it in 25 liters keg can sometimes spoil if you don't store them or tighten it properly due to air. So some people store them in drums. But let's use 25 liters keg as our example here. Then you have your first batch. So we're using 100 kegs per batch as an example. You want to buy 100 kegs, store them, and then sell them when the price increases. So let's imagine that each keg cost at this point in time, they cost 18,000 naira, and then you sold them. Let's say you later sold them for 21,000 naira. So let's look at what is our return on investment going to be. Now, from the income statement that we have here, you can see that the revenue is the selling price, how much you sold it, that's 21,000 naira. That's 100 kegs. You can see that's 2.1 million naira that you're going to get back after the cost, and the cost of the goods is 18,000 naira times 100 kegs, which is 1.8 million. So our profit there, which is our gross profit, don't forget, is going to be 2.1 minus 1.8, that's 300,000 naira. Like I said, I'm doing this analysis in naira, so whatever country that you are, just make sure that you convert it to your local currency. So right now we also have our after our gross profits, you can see your gross margin from there. But then we're going to move to our operating expenses. You can see your transport. transportation to and from the market. Let's say we're spending 50,000 naira. Our storage, let's say you are renting for a space. Let's say we spend 20,000 naira to store it, and then our loading and offloading, we load it to the truck, we offload it from the truck. All those things cost 10,000 naira, and then our packaging cost 5,000 naira. That's the packaging for the keg, maybe the purchase of the keg and things like that. Then miscellaneous, we have 100,000 naira. That's on miscellaneous spendings, maybe for security, for feeding, and whatever thing that you spend. So this is our miscellaneous. Then you see what's our total cost. We have our total cost now. We have all this is 50,000 naira, so 30,000 naira. So everything is now 200,000 naira is our cost, right? So after this, we've gotten our gross profit of 300,000 naira. We now have an operating cost of 200,000 naira, and then our total spendings, our total net profits. Let me use the word operating profit rather. Our operating profit is now 300,000 naira minus 200,000, which is 100,000 naira, right? So we can calculate our ROI based on this our operating profit before we pay anybody that we're owing. And so our ROI is going to be 100k, 100,000 naira all over the 300,000 naira times 100, right? So we're going to get that's about 33% for our ROI. But let's say we're still looking at how much we borrowed. We borrowed 70,000 naira because we needed to get so many things and our cash finished. So we borrowed 70,000 naira. So we now had after after we've paid back that 70,000 naira. Imagine that we paid no interest. We just paid 70,000 naira. We now have 30,000 naira as our net profit. So we divide that by our cost. We see that our total ROI is now going to be 10%. So that's how you calculate return on investment for a commodity like palm oil. Whatever thing that you are trading, whether palm oil, ginger, cocoa, cashew, you must ensure that first of all you know what are the things that are involved in terms of getting that product from the raw materials to the finished goods, and how the whole value chain around that business. You must understand them, make the key assumptions before and after, then look at your income statements. Make sure you do this thing before you start, and then cross check after you start to see whether there are balances and things like that. Then we'll now get our return on investment. It's very important for you to get your return on investment because, like I said before, it shows you whether that business is really worth it. It shows whether that business is really worth what you're doing and how much of your cost gave you that investment that you have. So for every 10 naira, for every 10 naira that we get 11 naira, right? So we're getting a 10% return on investment on our oil trading. So the next thing I'm going to show you for cassava, so that you see the total, all the things involved in getting the cassava, from cassava to the selling of the tube of the cassava tubes, and then we're going to see how our return on investment is going to be for that crop. The next thing we're going to talk about, we're going to analyze our ROI for a crop, and the crop we're talking about is cassava farm. Let's imagine that we have 1 hectare of cassava farm, and we know that cassava takes about 12 months to fully mature and to be sold at. So we see that from this analysis, we see normally we would have gotten this at the beginning of our planting season. But let's do this at the end, and then we already know before you even go venture into cassava farming or any other crop farming, you must ensure that you understand the selling prices. You understand the selling price and for what quantity. For example, let's assume that in this area we have 40 naira is what to buy 1 kilogram. 1 kilogram of cassava is selling for 40 naira, and we already know from analysis and from previous research that 1 hectare can give us about 15 tons of cassava. So now let's imagine that our land preparation costs 50,000 naira for the land, and then our planting stems, the stem costs 30,000 naira, and then the labor for planting we spent about 20,000 naira. I just sometimes take it back and forth, but you must know that whether we are doing it right now, or whether you have done it before, or whether you are doing it after the sales cycle, whether you are doing it on paper before you start the sales, or you are doing it after the sales cycle. So we have our fertilizer and herbicide. Let's say that cost 35,000 naira. Our labor application for this fertilizer, to apply this fertilizer, we spent about 10,000 naira, and then weeding spent about 25,000 naira, harvesting 30,000 naira, transport to market 20,000 naira, like that. And then our total cost was 240,000 naira. Throughout the year, we spent 240,000 naira to produce cassava on 1 hectare of land. So now let's see what's going to happen if we are. So now since we have this, we're analyzing. Let's say, so since we have this, we're analyzing this 240,000 naira. And so we already have that for 15 tons. What will be 15 tons? We know that 1 kilogram is 40 naira. So 15 tons is 15,000 kilogram. That's what multiply. We see that is 600,000 naira. So 15 tons is equals to 600,000 naira. So we'll subtract that from our cost that we had, and then if we subtract that, we'll see that that's going to give us 360,000 naira. So our profits, our net profit, imagining this on paper without looking at any other things, let's assume everything being equal, because 360,000 naira as our net profit. Right, so this net profit now, to get our ROI is going to be what? It's going to be 360,000 naira all over our cost, which is 240,000 times 100. So let's see what is that going to give us. That's going to be about 150%. That's going to give us 150%. So that means our ROI is 150%. And I told us that normally we should aim for ROI of about 20% upward. And if I get 150% after a year, that's something that is okay. It's okay to manage. Now we've not look at money that you borrowed and your own personal equity inside that. Let's look at the whole cost. This is what the whole cost for 15 tons in 1 hectare gives to us. Imagining that we're selling 1 kilogram of cassava for 40 naira. So we had an ROI of 150%. So the next thing I'm going to talk about 6 common mistakes that new farmers make when they analyze their profits and their profit margin. 6 very crucial mistakes that you must avoid if you want to clearly understand ROI and not make mistakes with them. I'm going to talk about 6 mistakes that most young new farmers make when looking at ROI. It's very easy for you to make these mistakes if you're not careful and if you're not somebody of analysis. Now, the first thing is that revenue is not the same as profit. Now, if you sell your cassava, for example, it costs you 200 and you made 600,000 naira in revenue, that is not the same. This is not what you use to calculate your ROI. You will use the profit, which is 400, to calculate your ROI. So don't use revenue. If this person is going to pay you 1 million naira or $1,000, and then you spend over that, or you spend $850, it doesn't mean that you're going to be in profit, even though that's a higher revenue. So make sure that you calculate everything and understand that it's a profit that's giving your ROI, not just the revenue. So the next thing I'm going to talk about is time. So time is of essence. Time is important in ROI, in return on investment, because there's, even we talk about the cost of money. The cost of money, we also look at time also, because time is also very important. That's why in every financial formula you see, there's always that end factor, the number of years or number of months that is there. So even though you are making an ROI of 20, someone who's making an ROI of 20% in 2 days better than someone who's making an ROI of 50% in 1 month. So understand the difference. So time is very, very important. Always look at the time factor in your analysis of ROI. They also have hidden costs. So people they do their ROI, they do their return on investment analysis without looking at hidden costs. Hidden costs like what you eat, these extra small spendings that you have in the previous earlier I talked about petty cash book and all those things like that. There are some costs that you incur that you don't really take cognizance of in analyzing your previous analysis, your first draft or your first analysis. So you must always account for them in your ROI. This 400 might be reduced to 350 after looking at hidden costs. So always ensure that you factor in hidden costs in your ROI analysis. Also, we have input and outputs. You ought to have a strategic and a concise tracker for your input and your output form. Make it simple, not complex, but every time you spend, all your spendings, you have to track it. All your earnings, you have to track them. So always track your spendings and your earnings so that you don't end up making a fool of yourself and thinking that you are making high ROI meanwhile you're making a smaller ROI. Also, there are other opportunities that you must analyze them with. You have benchmarking in accounting, and then Benchmarking is, you are like looking at using this one as a, using your current opportunity and putting it with other opportunities and seeing which one is going to make you more money. For example, if you have the money for the same, for two things, and then you're seeing which one is going to make you the most money out of these two, and then the other one becomes the opportunity for God, because you don't want to spend your time on something that meanwhile you can be spending your time on another thing to make more money. So you can planting cassava in 1 year, and then you can actually plant corn more you can actually plant corn 3 times and have a higher ROI than that cassava. Then it's better for you to go for that planting, for you planting that corn and then making more ROI than going for the cassava just once for the whole year. So always analyze your whatever opportunity that you have, whether it's trading, farming, or logistics, with other opportunities, and see which one offers a better ROI for the same money. They also have one-time ROI does not equal to long-term ROI. The fact that you're making 200% right now doesn't mean you will continue, and the fact that you're making a negative ROI, right now doesn't mean that it will continue. So you have to understand this. Amazon in its early years, where their company was in loss for that period of time until it later bounced off and then entered into profits. So you must know that the fact that you have a big ROI right now, it doesn't mean that it's going to continue. You have to keep looking at your ROI and seeing where are you going, where are you coming from, and where you're going to. If not, you end up thinking that you are supposed to be making this consistently, and then when it fails or when it falters, you have a problem. And you must also understand seasons. Understand the season that you are in. If you do your analysis of oil trading, for example, at the beginning of the year, and you do it at the middle of the year, or the second quarter, or the third quarter of the year, it's going to be a different ballgame entirely, because you are now in a different season. I hope you understand what I'm saying. So this video, ensure that you subscribe and also like the video, and then share the video with as much people as possible. In this channel we talk everything agriculture, and I'll see you in the next